All right, we're live. Now, this is the May 5th Cinco de Mayo version of the monthly market update, where Dean and myself go over some Hawaii statistics, some things that are impacting Hawaii investors, and also some national and mainland news. So, if you guys want to interact with us on the Cinco de Mayo Thursday, I don't know what day it is today.
Thursday, yeah, Thursday.
Type it into the comments. If not, here we go.
In Hawaii, there's so much to do. There's hula, there's surfing, and real estate too. We just two local guys with so much to say. So listen to the real estate brothers today.
We post all these old videos at arialoha.com/videos-articles.
Yeah, so yeah, hopefully everyone's not drinking their tequila or opening their Boys' Day presents today. But yeah, I'm Dean Ueda, as you folks hopefully know by now. You can find me at youtube.com/real estate of Hawaii for my YouTube channel. Also various other social media platforms like Facebook and Instagram, LinkedIn. So without further ado, let's jump into our.
I gotta change the slides for you.
Oh, do I have
Okay.
control? Okay, I can. Okay, I can. Sorry about that. So, unfortunately, some people might say good, some others bad. We don't have any records broken for the month of April. Kind of boring compared to these last few months. So again, the statistics from the Honolulu Board of Realtors will be coming out tomorrow, 6 days after the end of the month. But here's some information regarding median home prices. Probably going to be pretty darn close to what they report. So like I said, no records broken for the month of April. We have 1.109 million for the median single family home price. Slightly down from prior month, but almost 20% from same time prior year. Same thing with condos and townhouses, slightly down a smidgen from prior month. I think it was 515,000 in last month, but up 14% from prior year. I like to talk about month supply of inventory. Sometimes, unless you dig in, the statistics from the HBR doesn't include these and their infograph. But I always like to talk about these because of supply and demand, right? So over the long haul, you can see this trending down for a month supply of inventory. Just above 1 month of inventory for single family homes and 1.5 months for condos. And you can see both of them are down 15 and 40% respectively from same time prior year. So let's see, moving on. Oops. So days on market, another statistic we like to follow. Basically, it's the median days on market from the point in time the property is listed to the point that it goes into contract. And so it's relatively low for single family and condos at 11 and 12 days on market. As you can see on the graph too, that long trend, it's seems to overall, best fit line, it's trending down. And I know it went up for single family 10%, down 14%. But when you're talking about these, 11 and 12 days, that's really not saying much, I think. Just to me, looking at the graph helps a little bit more in terms of versus percentage change. One thing I wanted to talk about, Lane, and it's been the topic of discussion for feels like forever, but interest rates and how we're seeing them start to climb. I think Fed Chair Powell spoke yesterday, right? And said, what is it, 50 bips they were going to do instead of 75?
Well, definitely higher than like the traditional quarter point, quarter point, quarter point, quarter point.
Right. But I think the markets were happy that it wasn't going to be 75 dips, and that's why the stocks rallied, I think, yesterday, right? I'm not sure what happened today.
If this is a screenshot of today, it bombed even more than it went up. Bombed up
Oh,
1,000 points today.
so the day trade, and it's interesting.
So your first inclination is right. It should have went down, but yesterday went up. Then it went down even harder. So, yes, gravity still works. It should work.
Yeah, well. So what I want to talk to you about is just trying to put things in perspective. And I know, Lane, you and I always discuss this in terms of people. This screenshot was, I think, a few days ago, but 30-year fixed at 5.54. I think when I checked today, it was maybe 5.62. Interesting thing is, the 30-year jumbo is 4.7, which is lower than the 30-year fix. So, but anyway, what I wanted to get at is, when you look at the graphs, again, trying to put interest rates in perspective, you look at a 2-year trend and you look at this and, we've been spoiled for the last 2 years and we see it spike up to about 5%, right? In the last couple months. And then we take it a little bit further and say, now we look at the 10-year trend, right? So back in 2012, and we see some other spikes, but we're still at a 10-year high compared to looking back 10 years. And we take it once even larger, and we look at the 51-year trend, right? And now you look at this, kind of puts things in big perspective, and this is what we've talked about in the past, Lane, where it's like, well, back in the early 80s, we were in the high teens, and you look at this line and compare where we are today, where we've been in the past, and it makes me feel like, it's low compared to, if you go back 51 years. So, I mean, to the point that, money is still relatively cheap is, I guess, my point in the grand scheme of things. I don't know. What do you think, Lane, about that?
I think I should change the title of my podcast from Simple Passive Cash Flow to like Value Add Real Estate, because simple passive cash flow, the buy and hold, it doesn't work if you just buy, hope, and pray, right? Because if you play around with that spreadsheet and you change the interest rate, your cash flow severely changes. But if you're doing value add, it doesn't matter. That's the difference.
That's a good point from that standpoint, where you're not relying on interest rate risk as much for the cash flow. So like you said, I like that because I'm realizing that too, right? In terms of that value add play is less directly related to interest rates than buy and hold and trying to make those margins work. Yeah. As always, I like to talk about the scam of the month. And so this one is kind of interesting. There's always new and improved controls to help protect us against these cyber attacks. And, most recently we've had, is that you, Lee?
That's me.
Oh, that's so multi-factor authentication was something that came out to help protect us against cyber attacks and these kind of things. But now these scams are MFA prompts. So what's happening is cyber criminals are annoying us and trying to get us to approve multi-factor authentication notifications. So if they get our credentials for just one account, then they can send out these MFA requests, right? And then they keep on just sending them out and just bugging you with the hope that you're gonna just go ahead and click on it, authorize it, and then that gives them permanent access to your account and any information that was relying on this MFA. So they just broke you, right? So always keep in mind, never approve a multi-factor authentication notification that you didn't request, right? Always good to create new strong passwords, unique ones for all of your online accounts. And if you receive a notification from an account that you aren't trying to log into, you gotta go in and immediately make changes to that password because that account has been breached. Yeah. So knock on wood, that hasn't happened to me yet, but something to keep in mind. Has that you experienced anything like that, Lee?
Um, no, it's funny. It's like, when everybody says, "Oh, don't open my email," like I got hacked. It's always, they clicked on something or they went to a naughty website or something or they downloaded something. Um, I don't know. It's always like the people who aren't super keen on how the internet works are the ones that get hit by this.
I see a bunch of those on Facebook. Like somebody's like, I've been hacked. Don't click on any messages from me, or
Yeah.
I've seen instances where I've gotten friend requests from somebody who I was already a Facebook friend with, and then they're like, but it's obviously a duplicate account, and they just kind of try to mimic it by stealing the pictures.
Yeah,
So I don't know
it's
if you've
always
seen.
funny when you get those like fake profiles from some like, porn site or something like that, and then they're just adding people, and what they're doing is they're adding people so they can infiltrate like groups and stuff like that. But it's always funny to see your common friends on there who just blindly approve like
Yeah,
people as friends.
yeah.
It's kind of embarrassing, I guess.
No, so it's good to be safe too. I just pinged somebody today, um, and I asked, "Do you know this person?" Because they were both. He was friends with them too, and he's like, "Oh yeah, yeah, yeah." They were in the same uh, investor group, undisclosed investor group. I think, or if I'm allowed to say it, I don't know.
Yeah, I've never been I've never seen like a duplicate profile of me yet. I must not be big enough. I
Oh,
must not. Nobody cares about me.
it'll be too obvious if they try to clone you, maybe. Anyway, in other news, so I just found out talking to some lenders. So Fannie Freddie are conforming condominium loans had a change at the beginning of this year. So at the beginning of in January 2022, Fannie and Freddie started requiring certification from a structural engineer to the safety and soundness of the buildings. This is for condo associations, yeah. And this is all in light of that Miami condo collapse. So the challenge we're having in Hawaii and on an island is that there, according to this lender, there's only one property management company for the associations that has been addressing this in including putting that certification in the questionnaire so that the association can complete it, and also get that structural engineering certification so that it can go through Fannie Freddie loan underwriting. So what's happening is because of this, I guess, lack of compliance to this recent changes, a lot of the lenders aren't able to fund or finance it unless it's a non-Fannie Freddie, or it has to be a portfolio loan. So the local banks that are willing to are ending up portfolioing these condominium loans that can't comply with Fannie and Freddie. So this point being is as a buyer, you should make sure check with your lender to see your options. Sometimes you're dealing with a financial institution, it might not be as flexible. Um, Loan brokers might be a little bit more flexible from that standpoint in terms of finding you a portfolio loan, or even sending you to the bank, one of these local banks. On the same side as a seller, on the opposite side as a seller, you should when we're doing our due diligence to make sure that the lender can approve the loan for the underlying property that you're trying to sell. Let's see, next slide. Again, it's me. So what I wanted to talk about lastly was, I don't know if you recall it, but I did a test or an experiment back in March. And what happened was, my mother-in-law, she had discovered drywood termites in one of her cabinets. So down here in the bottom left, she found some droppings, localized droppings, and she had the local termite exterminator come and treat it a few times, and it didn't go away. So, or the droppings kept returning. So what happened was, I had purchased one of these ozone generators. Actually, the purpose of me buying the ozone generator was to get rid of some odors in a unit that I had. So
What did that
and
cost?
it worked.
That thing?
I think this thing was, it's less than $100. It's very reasonable. I think it was like in the $50 to $60 or maybe $60 to $80 range. So it basically creates ozone. What is that? O2 is that O3? O3, I think. It creates ozone, and it has a radical oxygen molecule that breaks off and that helps oxidize items in the area. Right? So that's part of how it gets rid of smell. But also there was like all kinds of warnings. Like for this, you should definitely use it properly, because it's, if humans or animals or plants are around it for a long period of time, it's not good, like for your lungs, and for it'll kill plants, and it'll cause irritation to lungs for humans and animals. So beware if you're trying to use this for whatever purposes. It's to go at your own risk. Oh, that was fast. Yeah, these are the prices. I think I bought it for like 80, but
$60-$70.
And it's interesting because it has a smell to it. It smells like chlorine. It's very it's evident that it's on, and it's when I'm smelling it bothers me. So it's not like you won't know it's on and harm you, I guess is my point.
To use this like when you have a stinky house, you gotta listen.
Yeah, use it for that. Use it for your stinky car, things like that. Scents that you can't like wipe everything off of because it's in. So like someone like a smoker or something, you can, or dog scent that you can't, it's everywhere and you can't just clean everything. This will help. It breaks down the smell. So
interesting.
Yeah, so that's why I initially got it. But as I was, reading up before I used it, is saying how you could, being that it bothered people so much, or it bothered humans, and I was like, oh, you know what? I wonder if I could use it to kill termites, drywood termites. So I tried to research it. I didn't find much, but I did find one obscure YouTube video, and this is top right, where it talks about it was kind of this guy. It looked like in the real podunk area, but he apparently got some drywood as well as ground termites, and he put them in a container. He ran the ozone machine for 15 minutes, and it killed the drywood termites in 15 minutes, and the ground termites even quicker. So I was like, you know what, it's worth a try, being that I already had a machine. It doesn't cost too much. So I went, and in March of this year is when I ran the machine for about 2 hours when my mother-in-law wasn't home. And then so today she checked on April 29th, and she said there isn't any evidence of any new droppings, which is a good sign, but I'll also have to report back in another few months, because I think she had mentioned to me that it took about 6 months for her to see the droppings to come back. So, but preliminarily, I just wanted to report that this ozone machine could be a way to spot treat active termites. But we shall. I don't think
at least get you through a 60-day closing period, right?
No, I don't think it'll work for that either, because it's not a tried and true product for that. You know what I mean? It's not this is not an industry standard like spot treating or tenting and stuff like that. So unfortunately, it won't work for that. But for personal purposes, I figured it's worth a try. Preliminarily, it seems it might be successful, but I'll report it back in maybe 3 or 4 months to see if we have a final verdict. Yeah. So, yeah.
You ever spilled like fish sauce in your car That's the worst.
Oh my, that sounds awful. If you
Yeah.
do, let me know. You can borrow this machine.
I'll borrow your Ozone.
And I don't know if you're you remember, you're too young for this, but I had to add this picture. I don't know if you know this guy.
Who's that?
His name is actually Ozone, and he was from Breakin', a movie from the 80s. I had to add that in just because of the 80s reference. But anyway, I digress, and let's move on to you.
All right.
Oops, sorry.
All right. Well, people are interested in checking out investing on the mainland. My podcast, Simple Passive Cash Flow, Passive Real Estate Investing, and you can also check out my book, The Journey to Simple Passive Cash Flow. I think it's you can also check it out in simplepassivecashflow.com/book. But before we get to going through some of the hand-selected articles from this one, I got a lot of questions on like this cost segregation, bonus depreciation thing. You know, most investors kind of know that we've been having it pretty good with 100% bonus depreciation since I think like 4 years now. And this is the year, or next year is the first year it starts to kind of trail off a little bit, going down to 80%, and then 2023 or 2024, 60%, then 40%, then 20%. And as most people get, they freak out. They're like, taking all my bonus depreciation away. But I think what people fail to realize, like the bonus part is just a portion of all the depreciation, that they get. So I thought I threw this in here. This is a little table depicting the regular depreciation versus the bonus part, which is the more aggressive written stuff off.
And you're just basically front loading that expense, right? For tax purposes. So,
right.
And so I think what people need to keep in mind too is, like, to your point, you're front loading this tax expense that will need to be potentially recaptured later. So for people who are trying to maximize it, that also means, in my mind, you should be maximizing the tax savings you get, right? In terms of that's cash flow, and that means you should be maximizing your cash accounts in terms of, if the savings that you received in year one just go into the checking account, then what was the point in getting the tax benefit of it?
For most investors that are not doing real estate professional status or rep status for short, getting this boatload of depreciation and or bonus depreciation does them little good, other than makes them really giddy that they have several $100,000 of losses to offset any passive income that comes in. But there are, I would say, maybe 10% of investors that are doing a rep status strategy where they're aggressively using these losses to lower their income. A lot of times it's high income earners, guys in the 400s to $1 million range drive their HEI down. Those guys, they know what they're kind of doing. So, and they know that they, at some point they have to pay the piper, pay taxes because they run out of these losses. But, I think it's better to play it aggressive and pay no taxes today and see what happens in the future. But anyway, here we go. So this is talking about industrial investments. There's different asset classes out there. I mean, but just in the real estate world, which is kind of what we kind of focus on, there's multifamily, which are apartments, the industrial, retail, storefronts, shopping malls, self-storage. Right now, office is still pretty beat up. It's probably lagging the rest in terms of the market cycle. Probably won't recover for some time. That said, maybe the time is now to get good deals on that because it's not really too much heated. Apartments are kind of hot right now, which is kind of a bad thing. But it's hot because it's kind of a commodity because people need a place to live. Right now, to me, like the best yields in comparison to normal averages, or where things kind of shake out, industrial is probably where the best yields are. The problem with industrial is, like, if something changes in like the way people do business, like they find a way to ship things with autonomous cars, or Amazon just realizes like we just don't want to need as much warehouse space, it can drastically change the market. Whereas that's what's nice about multifamily apartments. People need a place to live, especially on the low end, which RE Business Online kind of talks about, investing in Class B and C workforce housing, new construction of affordable units is not really financially feasible, as most people will build. When they build something new, they always build it for Class A luxury. That's why I don't know why I always see this stuff, but on like the social media channels like Facebook, there's all this like chatter. Maybe I shouldn't talk about this thing. It's kind of political, but people get all pissed off. They're like, why is there no affordable housing? Well, there is no affordable housing because it doesn't make sense. If you're going to build something and go through all that pain and agony and cost, you build it for the highest value add, which is the Class A. And the thought process is the A's will push down the B's, then B's, the C's. But it is why I invest in workforce housing, because I think it kind of goes to the underserved.
That's where the local authorities in over here are having to, when they approve these large developments, they require that the developers include maybe 20-30% of the doors that they build need to be designated as reserved or affordable housing, right? And even at that, you're looking at these prices and it's like, wow. Some people even say, it's like, I think they say 120 to 140% of the median AGI, and that's still like really high for a lot of people. But to your point, there's still a disparity in terms of what the developers would want to build ideally versus what I guess what is best for the community, if for lack of better words.
Yeah, they just do it because they have to. If not, they're going to pay. They're going to have their permits. I know a lot of those higher end ones. There's a lot of the higher end ones that just say screw it. We don't want to. We'll pay. We're kind of like the Yankees. We'll pay the luxury tax to have all the biggest payroll. We don't want any low income in our community because that's not what our tenants want, or people who buy the condos want. I guess that's their way of doing it too. I guess, but. The sad thing is there's all this I don't know if you heard of that Bill 7 thing, where they have money set aside for especially building near the rail, but there was in Hawaii there was all that people were what's the word I don't know, giving people money for special treatment, and they all got in trouble, and it kind of and it kind of ran its course, and it made a super slow process even more slow and debilitating. It's just man, I grew up here, but it kind of is it makes me very shameful to live in here when you compare. I was just in Seattle last weekend, and they built that light rail like nothing. And here we can't even get in front of our feet,
Oh, and kind of on a tangent, they're trying to find the next site for our to dump our trash, right? The next landfill, and there is a lot more, relatively speaking, land on the west side versus the central or east side. But everyone's saying, oh, not in my backyard, not in my backyard. So I think out of the 5 to 8 proposed sites by the committee, they all got shut down because of whoever various obstacles, and people saying, well, the last landfill was on the west side, so we shouldn't be bearing the burden of the whole island. Which there's merit to that, but it's well, we got to put it somewhere.
Yeah. I think we're getting old, because I heard a podcast recently talking about this stuff where when people have more money and more leisure time, they actually are a little bit more aware of these things. We start to fixate on the problems, and then in actuality, life is pretty freaking good, whereas these small problems, it seems like it's getting worse and worse and worse. But I thought that was kind of interesting. But
perspective.
Anyway, I know you. You don't really care either way. You're kind of just like me. Just we're okay. So what does it mean? What are we gonna do? What are we gonna do, guys? we're gonna put gray in our apartments and our houses. That's what we're gonna do, guys. And that's what this article is talking about. Trendy colors and multifamily interior design. Now these guys are talking more about the Class A luxury stuff with blues and greens are widely believed as calming and healing, while white stands out for purity. But when you're building Class B or you're in Class B and C workforce type of stuff, just use gray by Sherman Williams. Take it from us. Joint Center for Housing Studies from Harvard says that the federal interventions have helped stabilize households' balance sheets and prevent widespread disbursements. So, they put in a lot of money to that they put to tenants they didn't get on the streets. And looking 2 years later, I think they did a pretty good job. Now, a lot of these government handouts kind of ended for tenants, maybe like middle of last year, I would say. Because a lot of our property managers would kind of help the tenants fill out these forms to get the money. Yeah. But now it ended a while ago, but now we're kind of seeing a rush through the system now. And I think you're seeing foreclosures kind of come up a little bit too. U.S. renters migrate towards feeder cities with Dallas suburbs among the biggest renter magnets. So, people are watching on the channel. These green areas are kind of the areas of movement for renter magnets. Top 10 cities in Texas. Here's the bingo card: Irving, Louisville, Dallas, Austin, Denton, Richardson, Plano, Arlington, Grand Prairie, and Houston, Texas. Any winners? Inbound versus outbound migration. So you don't want to be right. Am I reading this right, Dean? You don't want to be in this list, or you do want to be in this list. So from the top down: South Dakota, Maine, North Dakota, Illinois, Nevada, Arkansas, Nebraska, Alabama, Colorado, Missouri, Tennessee, Kansas, Arizona, North Carolina. Top markets for new multifamily construction permits. From the top down: Austin, Nashville, Raleigh, Denver, Seattle, Salt Lake, Orlando, Jacksonville, Charlotte, Philadelphia. So, a couple points here. These are the places where seemingly the pros have deemed this good places for them to build. They will flood the market with supply. So one would think that, if they're going to be more supply, there's going to be more competition. But maybe that there's a really huge need of supply. So I think you have to look at how these new units are absorbed into the market. Yeah. So that's the second half of the story. So you cannot just say, Austin, Nashville, Raleigh, it's a good market because that's where the pros are building. Or it's a bad market because that's where there's all this new stuff coming online. It's a little bit more complicated than that, but that's why we kind of talk about this stuff here. The year-over-year rent growth begins to slow. That does not mean that things are going backwards. It just means that we were running at 100 miles an hour, and now we're kind of cruising at 45.
Good point.
But everybody who wants to sell your attention and have you click on their links as clickbait will tell you the economy is going backwards. Oh no!
You can spin it however you want, right?
Spin doctor. Bloomberg reports that Blackstone says alternative investments are heading to your 401k. So Blackstone is a big conglomerate that buys up a lot of alternative investments, and they want to kind of get it into the hands of you at home. But just know that they're going to take huge fees. The other day I was looking at all these companies, I think it was American Express. They allow you to kind of invest in the stock market through them or something like that, or it's kind of like people are creating like Robinhood platforms, right? Like how just like how there's Netflix, Amazon Prime, platforms for content. It's platforms to get you to buy into the stock market so they can make their micro pennies in every transaction. Is the name of the game. It's the modern day gold rush where the people who got rich with the Levi people are people selling the tools for the gold rush. Blackstone's kind of getting into student housing a little bit for the build to rent stuff. I'm not a big fan of build to rent. I see it a lot out there. A lot of people talk about it, but if anything, I'd be more interested in like build to rent for students because students are less picky. Whereas the problem with these build to rents is they're extremely boring. Extremely boring. They almost look like housing projects for low income. That people buying a house typically want to feel proud over it, but it's kind of hard to feel proud when it's the exact same thing as the other 1,000 in the community, which is what these build to rent projects are. And this is kind of just a funny chart that like these assets have traded some of these 7 times in the last decade. So this is kind of like the list of like people who went on multiple dates or like with different people. These assets, like a lot of these are in the very hot markets, right? So people are finding that they've maybe not doubled their money, but like they've made 30, 40, 50% in just buying it. And then it just makes sense to unload the asset and go into 2 more. But it's just kind of the times.
Is it an example of just like buy and hold? Because there's got to be a certain point where you value added it to death and there's not much more from that. And you're just riding on the appreciation uptick versus doing any loss to lease rent or value add to the project.
Right. Like a lot of this is just merely, I mean, if you hold on to an asset for like less than a few months, you'd be lucky to go through or rehab maybe 10 or 20 units, I'm guessing, which if these are, a lot of these are like 50 units to 160 unit property, or there's some big ones too.
Yeah.
Like if all 6 of the owners rehab 20 units, then you'll get through it all. But like this is just showcasing the mere buy, hope, and pray, and it works in good markets. And I think nobody ever was sad that they sold with a gain. And sometimes it makes sense to do it, but it's just kind of showing the times. Like 2021 was just a phenomenal year, and 2022 is looking like an amazing year as it is, but really nothing in huge comparison to 2021.
Are these the markets that you're in terms of size-wise and number of units? Is that?
Yeah, I mean, it's all like your usual suspects, right? Your Phoenix, your Atlanta, your DFW. It's the one on the left, the market.
Yeah.
Like Phoenix went up. The rents went up 38% since the beginning of COVID. 38%. When it really for underwriting 101, a market, even a hot market, goes up 3% per year. So 3 times, let's just call it 3 years since the pandemic, 9%, but it's went up 38%. So that's time to buy was yesterday.
Yeah, anything for crypto, right?
Yeah. And here's a little chart on occupancy, and 3 bedrooms have been kind of upticking. So it's in the efficiency units, or the studios were the ones that took a nosedive in terms of rents in the beginning of the pandemic. My guess is because the people living there just roomed up with somebody else when times got tough, or moved in with their parents. But now that came up recently.
I'm thinking you needed that extra rooms for your home office because you're working from home or something.
Yeah, or maybe they went up to a 1 bedroom. Yeah, that might be happening too. But yeah, people want more units or more rooms. And I think part of this is like people who shouldn't be living in single family homes that can't afford it are having to go to 3 bedroom apartments.
true.
But yeah, if people are interested in joining our mastermind group, go to simplepassivecashflow.com/journey. If you guys have any other comments, suggestions, questions, topics, you can email us. Anything else to close us out, Dean?
No, just happy Cinco de Mayo and happy Boys Day to everyone, and always negotiate in good faith.
Yes, and do not use the ozone in your room. It is similar to sucking the air out of your gas pipe. So please do not do that. We have to always say things like that.
Thank
you, everybody, and we will see you guys later. See you next time. Aloha.
See ya.